Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. Let's first have a look at the headlines this morning. Asian stocks are off to a positive start on the final trading day of the week on a trade optimism which continues to rise. The European Central Bank cut interest rates on Thursday and also resumed its bond buying program. It will buy debt worth 20 billion euros a month as long as necessary. It was a positive surprise on the IIP front. The index of industrial production beat estimates in July, growing by 4.3%. Consumer price index that measures inflation for the month of August rose to a 10-month high. Food and beverage inflation too rose to a 14-month high in August. And Altico Capital, a real estate-focused NBFC which is backed by marquee investors, has defaulted on interest payments to a Dubai-based bank. The interest amount stands at 19.97 crore rupees. Let's talk about the US markets now. They continued to edge higher on Thursday, inching closer to their record high levels. The Dow Jones gained for a seventh day in a row, while the S&P 500 gained for a third day. The investors were enthused by the rising optimism in trade negotiations and the recent stimulus push by the ECB. Abigail Doolittle summarizes the action on Wall Street in this report.
Stocks finished higher in Thursday's Wall Street session. The Dow, the S&P 500, and the Nasdaq finished higher by about 0.2% to 0.3%. So very modest gains. But for the S&P 500, the third up day in a row, stocks finishing off the highs. But nonetheless, again, the bulls trying to take charge this week, which has been a fairly choppy week. Lots of talk about a rotation out of momentum stocks into value stocks, bond yields, lots of factors in play, but nonetheless, again, the buyers right now in charge. Now, on the day, speaking of bonds, down a seventh day in a row, the longest losing streak for bonds going back to April of 2018. The biggest backup for yields, price trades inverse to yield since November of 2016 in the presidential election. So investors wanting out of haven bonds, some worry that if those yields go too high, it could pressure stocks in the future, but not on the day, and certainly helping financials on the day. One of the top sectors, it is thought that those stocks benefit from rising yields with their lending activity. Energy, on the other hand, one of the worst sectors, down in sympathy with oil, down for a third day in a row as investors worry about supply for oil. As for some of the outsized movers, Smile Direct Club, those shares IPO'd on the day, and it was not a good first trading day for that dental company. Those shares down 27%. It did go off above the range, so some think that maybe the bankers were a little bit aggressive there, but nonetheless, Smile Direct Club in its first day of trading down 27%. As for some of the momentum names that earlier this week were lagging, this week a bit of a rebound, or today I should say, on Thursday, a bit of a rebound. Amazon and Alphabet also higher, along with the payment processors such as PayPal, Visa, and MasterCard. Lots of thoughts around those companies that the valuation too high, but on Thursday, investors wanting back in. That was true too for Starbucks and the stocks, the Philadelphia Semiconductor Index, those chip stocks doing well once again, up 0.3%. So overall on Thursday, stocks higher, bonds lower. It was risk on. In New York, Abigail Doolittle, Bloomberg News.
All right, seemingly some positivity in the Asian markets, but let's take a closer look. Rosalind Chin of Bloomberg News is joining us from the Hong Kong studios. Good morning, Rosalind. Hearing that there's going to be some interim measures put in place on the agreement between China and the US, that's perhaps leading to some positivity?
Indeed, yes, we have been hearing that Trump did say he would consider interim measures, and of course it's lifting the mood, I think, here in the Asia-Pacific region. We see some of the markets here are closer, so there's a little bit less volume than usual. So we've got China, South Korea and Taiwan all on holiday today for the Mid-Autumn Festival. Markets are open, though, including Nikkei and Hang Seng and, of course, Australia. The Nikkei right now is making gains of 1%. That's helping, of course, the MSCI Asia-Pacific making gains of nearly a third of 1%, well, 0.3 at the moment. But in Hong Kong, the Hang Seng is is making gains, but it's almost flat actually. It's just up by about 0.1%. And we have seen some property developers there. Some of the big members of the index are dragging a bit today, and that is largely on the concerns, of course, with these ongoing protests that have been going on in Hong Kong now for 13, 14 weeks. Not resolved yet. The issues are still ongoing. Sun Hung Kai, one of the big property developers here, saying yesterday, well, they posted their results with a 6.6% jump in full-year profit. But that was actually before, that period was before the protests really intensified. And looking ahead, they're saying their outlook is clouded by challenges, including the populism in Hong Kong and the trade protection issues, of course. And of course, they've said that the results are likely to be uncertain in future years, given the current unprecedented, challenging situation in Hong Kong. So we've seen other developers also not faring so well today. So as well as Sun Hung Kai, which is currently down more than 1%, we've got Wharf also trading lower, New World Development among the big ones there. Over in Australia, the S&P ASX 200 is making gains of 0.29% right now, on track for the longest winning streak, weekly that is, since April. So some positivity there, gains mainly in financial stocks. And a quick look at oil though, because of course we've had OPEC Plus urging its members to stick to the pre-made agreements regarding output curbs, because of course some nations haven't really been sticking to those and in fact have been pumping more, but OPEC Plus did not announce any deepening cuts, and at the same time the IEA did announce that there would be the world would be facing a glut in supply in 2020, so that of course is affecting the oil price. We've got Brent crude now at $60.35 and WTI at 55.06 a barrel there. So things to look forward to though. We do have some news coming up from the BOJ next week. That will be in the spotlight. Of course, a lot of pressure there on the BOJ because its economy, of course, needs a bit of more help. There's a lot of speculation. It will adjust the framework to cope with a weakening outlook and falling bond yields. A survey out today, Bloomberg survey, did show that the possibility of recession in Japan in the next 12 months has increased to 40%. Back to you.
Thanks so much for that, Rosalind. Now, speaking about monetary policy, outgoing ECB President Mario Draghi pulled out the monetary bazooka yet again in order to ward off recession in the Eurozone and also to boost growth in the Euro area economy. He restarted quantitative easing, but, and this is unprecedented because three powerful board members were opposed to Mario Draghi's move. Kathleen Hayes of Bloomberg News brings you more details.
To many people, it's no surprise that the ECB moved, led by Mario Draghi. He's stepping down at the end of October. So this is the meeting when he thought a year ago he'd be hiking rates. They stopped buying bonds. Well, they got it all going again. Let's look at a chart. Let's look at a very important indicator of the Euro area economy, which has been weakening for some time. The trade war just making it worse, especially for export-dependent countries like Germany. What you see is a blue line, Euro area manufacturing PMI, below 50 since February. GDP down to 0.2% quarter on quarter. Germany, as I said, already negative GDP. So this is just a one indicator of what, in real simple terms, Mario Draghi is responding to. Concern about recession. And in fact, he did see recession risks rising. He doesn't think it's going to happen, but that's the big reason why they've started buying bonds again. More QE. From November 1st, they're going to buy $22 billion of bonds per month, getting more negative, that key rate down to minus 0.5 from 0.4. ECB giving banks exemptions from negative rates for some of their deposits, so they make it that more negative rate bite into bank profits more. Draghi cited geopolitical uncertainties, protectionism, inflation expectations. Speaking of inflation expectations, well, they are not so great right now. One more chart to take a quick look at, because you're going to see a dotted line, 2%. Their target is just below 2%. How often have either of their measures, headline or core inflation, been even just below, let alone on 2%? Once again, a downtrend. This is another thing Mario Draghi is very concerned about, inflation expectations getting worse. That's why the bazooka's out.
Then why the three board members fight him on this?
Unprecedented revolt, Sherry. You had the core Europe countries resisting. The central bank governors of France, Germany, the Netherlands all pushed back, and didn't want to restart QE. Actually, they were saying, let's save it for an emergency. What if there's a hard Brexit? We need something like that. There were some other members of the board who dissented. In the end, Mario Draghi said he had a clear majority. There was no need for them to take a vote. They usually don't. And so just moving ahead with that anyway, I think another thing very important pointed out by our Bloomberg News team looking at this, Christine Lagarde's taking over in November. Some people on the board may be already a little bit concerned that she's not an economist and other concerns, as it's not surprising. Mario Draghi was a very strong leader, but she's now in position where she's inheriting the mantle from Mario Draghi to have this aggressive stimulus at a time when key, powerful members are pushing back.
Well, that could develop over the course of the next couple of months. We'll bring you more on that later. But let's focus on the other big story from overseas. Overnight, U.S. President Donald Trump has confirmed a Bloomberg report that the U.S. could be looking towards an interim trade deal with China. Sarah McGregor of Bloomberg News brings you more details on what that interim deal could look like.
So our earlier reporting today by our trade reporters Sean Donnan and Jenny Leonard, when they spoke to their sources, said an interim trade deal that's being considered right now would have the U.S. scaling back, even if not putting on hold, further tariffs against China. At the same time, China would agree to these IP changes that the U.S. has been demanding, as well as addressing the trade deficit through more agricultural purchases from the U.S. So this is an idea that's been put forward. Trump has not signed off on it, but it's one of the ideas they're considering as the two sides prepare to meet. We know that U.S. deputies are meeting with their Chinese counterparts next week, and that they're going to lay the groundwork for hopefully Chinese official Leah He to come to the U.S. in early October and meet with Mnuchin and Lighthizer. And the idea is that they could all sort of agree by then on this interim deal and have something to announce at the end of that meeting.
We had that 150-page document going around back in May with the Trump administration saying that we were very, very close to a trade deal. So what's changed since those spring negotiations?
Well, the U.S. has repeatedly said to China they wanted to return to that 150-page document. At the time, the Trump administration said it was basically 90% complete. Of course, they then accused China of reneging on some commitments, and the whole thing fell apart. What's happened since then, as we all know, is a massive escalation of the tariffs, with the latest and harshest being the September 1st tariffs taking effect. And I think, the two sides are starting to feel the pinch economically. They're really, in the U.S., starting to feel the pressure from the U.S. business community, and Trump has elections coming closer and closer. And I think the prospect of tariffs, especially the next round, a new fresh round on December 15th, hitting these consumer goods, that's a pretty scary prospect for a lot of companies and for consumers, and as Trump heads in to his 2020 re-election bid.
All right. Now, meanwhile, oil prices fell overnight after OPEC Plus urged its members to stick to the production cuts planned earlier. However, no deliberations were made on deepening those cuts. Stephen Stabzinski of Bloomberg News brings you the key takeaways from the OPEC meeting held yesterday in Abu Dhabi.
The biggest takeaway, according to the folks that we've spoken to, is that it will be business as usual for OPEC. They're not making any changes. Of course, they did urge folks like Iraq and Russia to hit their cuts. They haven't quite hit them yet. And by hitting those cuts, they could maybe take out 400 to 500,000 barrels a day from the market. But besides that, there wasn't much movement. No talk of concrete action towards deeper cuts. Oman oil minister did say that potentially they could talk about it again when they meet in December to deepen the cuts. But this comes on the backdrop of the IEA putting out a report just in the last day saying that we're facing quite a large oversupply in the market in 2020 due to U.S. shale production, and therefore there needs to be some sort of action from OPEC Plus. So it was a bearish sentiment in the meeting over the last day.
Yeah, so how did the market respond to that news?
Well, since we saw prices fall, I think the market, while there was a lot of expectation of not that much going into the meeting, while we were expecting that the new Saudi oil minister wouldn't be rocking any boats, oil prices still fell yesterday, and it's still down a little bit today. So what we're expecting now going forward is, I think the market's going to be looking for more bullish sentiment from OPEC, and They're going to be looking for other ways that they're going to try to combat potentially growing divide between the U.S. and China with the trade war, and also what's going to happen with the U.S. and Iran if the U.S. were to remove sanctions and allow for Iran to boost their exports of oil. So really, the market's going to be looking at those two things going forward.
Let's have a look at what else is making headlines across the globe. Jessica Summers of Bloomberg News brings you the first word headlines.
UK Prime Minister Boris Johnson denies lying to the Queen when he advised her to support his plan to suspend Parliament ahead of Brexit. He spoke after a Scottish court ruled the suspension is unlawful, although an English court decided otherwise. Brexit is due in just 50 days, and Johnson insists it will happen with or without a deal. Brussels says UK negotiators have brought nothing new and that Johnson is not serious.
Yes, to give the impression that he's negotiating in good faith. I think that his whole plan is to take the UK out of the European Union without any deal, but at the same time being in a position to blame the European Union for inflexibility, you know. So he must project the image of someone who negotiates in good faith, who wants a deal, etc. So that if there's no deal, obviously it can't be him. It must be the others.
The threat of recession in the U.S. is back, with economic indicators flashing initial warning signs. However, the message is mixed. Manufacturing is slowing, uncertainty is mounting, and businesses are cutting expenditure. But unemployment is near a 5-decade low, stock prices are high, and the Fed is cutting rates. Economists say there's a 35% chance of recession in the next 12 months, up from 15% a year ago. And the pro-democracy drive in Hong Kong hit a new tone, with thousands of people belting out a protest song in shopping malls across the city. Activists saying glory to Hong Kong and a respite from increasingly violent demonstrations, and showing the rising creativity of the pro-democracy movement. More protests are expected this weekend, and police have denied a permit for one mass rally. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jessica Summers. This is Bloomberg.
All right, let's talk about the trade setup for the day in India. Agam Vakil is here to tell you all about that, and also what's happening in the futures and options space. Good morning, Agam. How's it looking today?
Good morning, Alex. Well, we're likely to see a little more consolidation. Do remember there's been a lot of volatility, and there was hope that we'd see an encouraging day yesterday, but it didn't turn out, considering we started the day with gains and eventually lost out. For now, the SGX Nifty is absolutely flat. We really don't have too much in terms of indication. And as I was suggesting, eventually we did see the indices fall and end with 0.5% cuts. The mid-cap and the small-cap indices showing mixed moves, with some more advances coming in as far as your banking indices are concerned, specifically the PSU banking index. But what about ADRs? How have Indian companies done on exchanges abroad? For now, Tata Motors declines around 4.5%, while wiping out partially the kind of gains that we've seen in Tata Motors of late. ICICI Bank, on the other hand, advancing by as much as 2%. Not too much to speak for otherwise in terms of the other stocks. FIIs, they continue to sell? No, not really, because yesterday we did see a very small buy number. Today this buy number is a little larger. We just kind of have to wait and watch whether or not this is also on account of a block deal, because there's a possibility that this is as a result of the Apollo Hospitals block. But we'll be watching out for that. DIs, of course, on the other hand, sell at around 127 odd crores. Not too much to speak for otherwise in terms of gross numbers, but we do have Reliance Industries, Axis Bank, and Maruti Suzuki declining in trade, and well, bearing down on the indices among the major stocks. What are we witnessing in futures and options? Of course, well, yesterday was the weekly expiry for a lot of options, but I'll come to that in just a bit. For now, we're looking at a little bit more increase towards shorts in OI. Of course, this is as far as the Nifty is concerned, and this is after we saw a downturn in the latter half of the session. Well, a tremendous amount of unwinding in the Bank Nifty, and do remember that the Bank Nifty futures have been advancing over the past couple of days. Should this turn for the worst? Let's wait and watch. But that said, when it comes to the options open interest distribution, we're looking at a little bit more writing around the 11,000 put which is a positive. And I'll tell you why, because we're right now just a tad above that mark, and considering there is so much writing there, well, that provides a little bit of a support, at least in the near term. And that is exactly what we saw in terms of writing. However, we've also seen writing in the 10,900 call. Then this is very curious because you were somewhere around that range. So well, let's keep an eye on some of these movements today, because today will be a pretty important day considering we're going into a weekend, and give us an idea about how markets intend to trade. Well, that said, we're still seeing the VIX come off by around 3%, and that of course will soothe nerves of a lot of traders considering volatility is coming off. The Nifty put call ratio, not much change there at around 1.3 against 1.32. Interglobe Aviation is advancing. It's starting to make another up move today, and on good open interest too, so longs there. On the other hand, Apollo Hospitals, which began the day of trade on a very strong note, but eventually came off after the big block deal, that has seen a decline around 2.5%. CESCs, among others, which are also seeing some good changes there. Kotak Mahindra Bank, on the other hand, looking at unwinding. It's come off just a tad bit, but that is after the kind of strength that we've seen off late. Equitas Holding and Indiabulls Housing Finance, among others, which will be in focus. All said and done, Alex, it'll be very hard for us to point the direction of the market. But I can also tell you that at closing, we will have a good idea of where the markets intend to go in the next few weeks.
All right, thanks so much for that, Agam. All right, let's talk about the economy now. We had a couple of big updates in after market hours yesterday. Industrial production rose in India in the month of July at the fastest pace in 9 months, and the consumer price inflation rose to a 10-month high on the back of a rise in the price of food in urban areas. Pallavi Nahata reports.
India's industrial output growth in July was the highest in 9 months. IIP rose by 4.3% in July compared to 2% in June, according to data released by MOSPI. This was also higher than economist estimates of 2.3% according to Bloomberg. The manufacturing sector grew by 4.2%, with 13 out of 23 industry groups in the sector showing positive growth. On the other hand, retail inflation also rose to the highest in 10 months, led by the rise in the food price index, which was at a 14-month high. Retail inflation stood at 3.2% in August compared to 3.15% in July. A Bloomberg poll of 41 economists had estimated CPI inflation at 3.32% for August, while the consumer food price index in urban areas rose by 7.07%. In rural areas, it rose by 0.85%. This led to wide divergence between both segments. Also, core inflation, which excludes food and fuel, moderated to 4.2% in August from 4.25% in July, suggesting that demand conditions remain weak in the economy. Despite the pickup, inflation remains well below the Monetary Policy Committee's target of 4%, with GDP growth falling to a 6-year low of 5% in the first quarter of FY20 and inflation remaining subdued. The focus of monetary policy will remain on reviving economic growth. The next meeting of the MPC is scheduled for October 4th, 2019.
All right, seems like there are signs that the stress in real estate in India is bubbling over into the NBFC space. Altico Capital, a real estate-focused non-banking finance company backed by marquee foreign investors, has defaulted on interest payment due to the Dubai-based bank. The NBFC failed to transfer 19.97 crore rupees that was due on the 12th of September on a principal amount of 340 crore rupees. Altico is a real estate-focused NBFC, implying that its lenders may have turned, or its lendings rather, may have turned bad. Indian banks like HDFC Bank, UCO Bank and SBI also have a sizable exposure to the company. Altico has upcoming payments of 300 crore rupees in interest and principal due between now and March of 2020. All right, let's turn now to the stocks that you have to watch out for in trade today on account of them being in the news. Yash Upadhyay is joining me to tell you all about that. Good morning, Yash. What's on your list today?
Morning, Alex. Not a whole lot of stock price moving news that has come over the post market hours. But Dr. Reddy's would be the one name to watch out for after the company has received the establishment inspection report from the US FDA following the closure of its Vizag formulation plant's audit. Now, this was the same plant which had in the month of June received 2 observations under Form 483. So positive news for Dr. Reddy's. Biocon 2 will be in focus after the company has licensed 3 generic formulation products to China Medical System Holdings. Infibeam has said that it would be demerging 2 of its subsidiaries, which would later on go on and get listed on the exchanges. Power Grid Corporation would be in focus after the company has been declared the lowest bidder for 2 transmission projects in the states of Madhya Pradesh and Rajasthan. DHFL that has also defaulted in terms of payment of the NCD and its interest worth close to 197 crore rupees, which was due on September 12th. And lastly, in terms of key bulk deals, Future Retail saw Bennett Coleman and Company acquire close to 74 lakh shares, or about 1.5% stake yesterday, as well as Apollo Hospitals. We know the seller was the promoter group entity, but the buyers were the likes of Abu Dhabi Investment Authority as well as Societe Generale.
Thanks so much for that, Yash. Right, as 10 days of festivities came to an end yesterday on Anant Chaturdashi, many parts around the country bid adieu to Ganpati Bappa. Here are some of the visuals as idols from more than 900 pandals in Mumbai hit the roads for the last time. Take a look. As I say here in Maharashtra, Pudcha Varshi Laukarya. Let's take a look at some of the stories that you'll find on the website bloombergquint.com. The first one is the Reserve Bank of India has said that it has reduced the risk weight requirement for consumer loans to 100%, a move that will reduce the cost of such loans. The risk weight refers to the capital that banks have to keep aside as provisioning to cover any loan defaults. Currently, the risk weight requirement for such loans is 125%. Lenders to SR Power's Mahan project in Madhya Pradesh have sought details of a proposed settlement plan from the company's promoters after negotiations to sell the project to ArcelorMittal fell through. That's all you need to know going into trade today, but do stay tuned. There's a lot more coming up over the course of the day. This is Bloomberg Quint.